Patrick, welcome. It's great to have you.
Thank you. Great to be here.
So are you primarily contingent on rents? Because which way do you think those are trending right now, and how favorable is that for your company?
Well, rents have been going up so fast the past couple of years. I don't think anybody really expects them to continue to go up as fast, but we are bullish. I mean, it's a supply and demand imbalance, and as it becomes harder to buy a house with interest rates where they are, people will be renting longer. So I think we're bullish on rents going up over the next 3 to 5 years. It's probably just not going to be as high as it has been.
Careful you don't cause a market sell-off, Patrick, because if you're saying rents are going up, people are going to have to rethink how much disinflationary pressure there is in the economy.
Maybe that's my strategy,
That being the case, you guys, as I understand, are you a builder or just an investor? I mean, could you be part of the solution by expanding your portfolio and increasing the supply of multifamily homes?
Yeah, I mean, that's our plan. I mean, what we primarily are an investor. We've done a lot of, building and development as well. But where we see the biggest opportunities is in the structured credit space. So as borrowers, as owners of properties get into trouble, we want to come there and provide rescue capital. We want to come down, provide capital for them to pay down their interest rates, continue to manage the properties. And we'll come in a preferred position and really look for properties that we want to own long term and in markets we're in. So we're looking for good properties with just bad financial structures, weak owners that are not in good financial positions in the markets that we, are very bullish on.
Patrick, I'm so curious whether you guys are coming out of the pandemic into a permanently changed real estate landscape. That is, are you seeing different trends now? Is it whether it's regionally or in terms of exurbs versus suburbs versus downtowns that we didn't see before the pandemic? Is there a lasting impact from what we've all been through over the past couple of years?
I mean, I think the lasting impact is people are now aware of the Sun Belt. We've been investing in the Sun Belt since 2004. And we still see that as a very attractive option as people are continuing to do it. Companies are moving to the Southeast and to Texas and to Arizona, and, which brings employees. And once people are here, they don't really want to leave. The cost of living's better. It's a higher quality of life. And it's frankly a lot easier to operate a business in these markets. So like I said, we've been bullish on these markets for a long time. I think what the pandemic did is really bring awareness to the international scene of how attractive the Sun Belt markets are.
But that said, you still think Austin, Phoenix, Miami, that these are overvalued markets?
They're overvalued because where the interest rates are. As interest rates go up, the value of commercial real estate goes down. These properties are still performing just like they were. But as the 10-year goes up, cap rates have to go up. So that drives down the value of the properties. This is all capital markets. It has nothing to do with the fundamentals of multifamily business. If you look at an office building, especially with all these layoffs, that really is a deterrent to the value. In the multifamily business, it's really capital markets. So as interest rates go up, values go down.